Our next guest says Canada's relevance on the global stage is shrinking and no longer attractive for foreign capital. Let's go to Martin Pelletier, Senior Portfolio Manager, TriVest Wealth Counsel with Wellington-Altus Private Counsel. Thanks for joining us today.
You betcha. Thanks for having me.
So you believe Canada is getting less relevant on the world stage. Why is that?
Well, I think it's because of the policies that we've seen over the last decade in regards to putting up barriers to attract capital. We're not viewed as a regime where there's stability, scale, or opportunity. The regulatory environment is quite excessive, and as a result, foreign direct capital and foreign direct investment has been leaving the country, not coming in. And what we're seeing out of the new government or new leader of the existing government is nothing that's really going to move the needle, in my opinion. MOUs are simply, talking about the things that they want to do. But this is a time that we need more action than consultation and talk.
Is part of the question for Canada surrounding CUSMA and whether or not it's going to be renewed?
Yeah, that's going to be a major issue, in my opinion. I look at Trump's response to Canada and them negotiating with China that, hey, do Canada, go ahead. I think that in itself shows that we're in a point of weakness, not strength, and Trump shrugged it off. CUSMA, in my opinion, is likely going to face some tough renegotiating before June, and most likely replaced by a bilateral agreement that will not be favorable for the country. And that's something that we should be cognizant of, especially if we happen to get an election before such time here in Canada.
Okay, so how are you advising investors on bonds at this point?
Well, I would look at what the government of Canada is doing and do the opposite. So we don't want to react to things. We don't want to say react to, poor me, poor us, what's happening to us, or blame them. Although we do have a situation where there's been some policies and a lot of policies hostile towards Canada from the U.S. But we could say, let's take a step back and respond logically. And looking at Canada itself, we don't have any gold reserves. We're the only country in the OECD that doesn't. But we do have mining companies. And so maybe you want to own a little bit of gold itself as an investor. Maybe you want to own some U.S. dollars. Maybe you want to own some gold or precious metals producers per se in your portfolio, and take a different approach to what our country is doing nationally.
Let me take a step back, because we talked about CUSMA, and you don't think it will go very easily. I don't think anybody does. But you also say that China is not an answer. Why is that?
Well, okay. Looking at a long-term partner, long-term relationship, they tend to do deals with countries that are in a stressed or disadvantaged position. We are in a stressed and disadvantaged position. So we're reacting by going to China in itself. We're negotiating from a point of weakness. I would rather see the government take a slow approach, a slow and steady approach, and slow play the U.S. government. I personally think we're going to see a change in U.S. midterms. That could be very favorable to Canada. So time is an asset, not a liability. And I don't think we want to respond by antagonizing someone south of the border that could be quite responsive or unpredictable, or probably a better choice of words.
Okay, let's get to how you are moving money around. What are you advising investors? Precious metals, still on a run, gold gaining record after record, silver as well. Are you adding more to precious metals?
Well, we had a good position in silver. Didn't anticipate the kind of run that we've seen. It's surpassed our level of comfort with volatility. And so we've taken profit on it. Probably looking based on the activity today, maybe too soon. I don't know. We rotated and increased our position in gold. We've done so through some ETFs like the GLD, iShares Gold ETF. And we think gold is a good long-term way to protect your portfolios against debasement. And there still is deflationary risk on stocks. We're seeing or higher beta plays like Bitcoin, whereas gold and silver are providing a nice hedge as governments are having to print money to buy their debt. and that should continue to see that debasement. If you look at the purchasing power of our currencies, both in Canada and the U.S., we're at 74 cents on the dollar from 2019, and that's not good if you're sitting in cash.
Okay, so we talked about gold, and you liked Agnico Eagle in the gold space, and then you also have a suggestion for copper.
Yeah. So we have Steve Rolls. He's been on your show, partner of ours, and he covers these stocks and has done a good job. Agnico is we like it because of its low-cost, geopolitically safe jurisdictions it operates in: Canada, Australia, Finland, and Mexico. It's got long life reserves, strong cash flow, and disciplined management. So it's a good anchor point for us in the producer space. When I was an energy analyst, we always looked at owning the commodity or the producers, and which is the cheaper way of doing so. And we think that companies like Agnico are not reflecting the current price environment, and eventually they can continue once that investors get confidence in that. They'll start moving more into some of these names like Agnico, and that'll be a good way to play it. BHP on the copper side, it's a global copper producer, and it's got some really good discipline. We think copper is structurally undersupplied with a long cycle demand from electrification and grid expansion, and copper isn't playing the same kind of upside volatility that we're seeing in other commodities like in gold, for example. So we want to own a little bit of that in our portfolios.
Okay, Martin, I got to leave it there. I'm out of time, but thank you for your time. Good to see you.